Better System Trader, episode 45.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Hey there, this is Andrew Swanscott here, and welcome to another episode of the Better System Trader podcast. In today's episode, we'll be covering one of the key elements to a trading strategy. Actually, it's probably one of the most popular elements in a trading strategy. A quick search on the internet will produce thousands of different techniques. That element is the entry, how or when we get into trades. And we have a fantastic guest who has a slight twist to the traditional approach to entries, which he's going to share with us today. That guest is Andrea Unger, the only trader to ever win the World Cup Championships of Futures Trading 3 years in a row. He's been a guest on the podcast before too, way back in episode 16, which feels like so long ago. Anyway, in today's chat, Andrea discusses his approach to trade entries, how the traditional approach can actually limit our ability to read the market, and how he's modified the standard approach to identify additional entry opportunities. We also cover a bunch of other topics too, like combining timeframes, exits, trade symmetry, setup groupings, loads of valuable knowledge in there. But before we get to that, a very quick message from our sponsor. How would you like the ability to mirror the trading of some of the best futures and forex traders around in a program designed to take the exact same trades they take in their own personal accounts? Champion traders like Michael Cook and Larry Williams. Well, you can with World Cup Advisors Leader Follower Auto Trade Service. For more information, check the show notes page at bettersystemtrader.com/45. And of course, trading futures and forex involves significant risk of loss and is not suitable for everyone. Okay, so let's get to it. Here's trading champion Andrea Unger sharing his knowledge on entries. Hi, Andrea. Thanks for joining us today. It's great to have you back on the podcast.
Hi, Andrew, and thanks for inviting me back.
Oh, thank you. So you were a guest on the podcast before episode 16, which is quite a while ago now. But just a quick refresher on what we discussed in that episode for those that don't quite remember. There's a couple of points there. We discussed techniques to creating robust strategies. You also discussed the role of indicators in trading and principles to strategy creation. And then we kind of finished up a little bit with how you use optimization to understand market behavior, which I thought was a very interesting technique. Now, today we're going to focus on something a little bit different to those ones. We're going to focus on setups, which I think it's probably one of the most talked about or most popular components of a trading strategy. Now, I think the way you do setups has got a little bit of a twist to the traditional approach, so I think it'd be great to have a chat with you about that. But can we start just by, perhaps you can explain the normal path to discovering setups in a trading model?
Of course, yes. As you mentioned, I do it a little bit different, or at least I think to do it different. I start from entering the market, which is I find a trigger, a level to enter. I decide what a reasonable good trigger could be. Then I go through routines of optimization where I look at what best combination of chart patterns lead to better results for that kind of entry. This means that once I enter, for example, on a stop order, that's not very important, obviously. Then I go through these routines through a number of patterns that I already coded in my software, and I see to which of these it responds better. It's not an automated process as some automated chart patterns do. This is a process where going through those patterns, I analyze what the market is telling me through those patterns. So it's not just a pick and go. I look at the results and afterwards, I decide if they are acceptable or not, depending on the chart pattern that I find.
Right, okay. So I guess that the traditional way is to look for a setup first and then a trigger, but you're saying that you prefer to look at a trigger first and then look at the setup around that? Is that?
Yes, actually, the most logical approach is you get a setup, and then once you have a setup, it means the market, in your opinion, is ready to go either up or down. Then you look for a trigger, which is the best possible entry level to ride that move. And then you place the order. This is the normal process which leads to studying the markets and to understanding them. For example, the commitment of traders reports is a classical setup where you get an information about a certain load on the commercials which might push the market up or pull it down. And so you say, okay, I think the market is ready to go up or to go down. This is the setup. Now, where reasonably shall I enter to go for the up or down move? That's the trigger. You find the level. I do it opposite. I don't go for a long run. I normally have short or middle term strategies, which means intraday to 5-6 days. So it's something much closer. And I look into levels to enter the market. And afterwards, I look what happened before that level, different conditions, and I analyze the different results. I say, oh, look, if I entered after this setup, I would have got much better results than after this under setup, and so on.
Okay, so just so that I'm clear on what you're saying here, do you think that there are some problems or deficiencies in using the normal approach of setup trigger order?
I think that the setup trigger order limits the possibilities to really read the markets. Because if we start from the setups, it means that we use our knowledge about the markets, our base theory, which means if this happens, it means the market is ready to, maybe also fundamentals, news, anything. But then it's we don't have a broad variety of possibilities to understand. If we do it the other way around, we get a number of different possibilities. And looking at these different possibilities, we might even understand how the single markets normally move. It means you can discover, well, an example is the mini S&P is a classical mean reverting market. DAX future, which is still an index future, is more trend following. These are normally things that people know if they are traded, but it's just an example. Running these tests, you get this info. If you don't know that yet, going through this number of tests, you can discover that market is easier to trade in a mean reverting mode, or this other market easier to trade than trend following. So actually, going through the number of setups, if they are built properly, I have a number of patterns, more or less 40 patterns, basic patterns to read the markets. You get all a number of back information so that you understand what the market normally does. And if you understand the normality of a market, then you also understand what to do on that market. Because I believe that every market is different, so you have to understand every single market to do the right thing.
Yeah, okay. So through there, you're mentioning that you're using the setup to determine the market conditions, whether it's a mean reversion or a trend following.
Just an example, yes.
Right, okay. So can you give some more examples of the type of setups that you might be looking for?
Oh, well, once I get into the trigger, I can group the patterns into some classes, which are volatility or expansion patterns. I mean, patterns which analyze how volatile the market was before entering, or how high the level of indecision was in the market. So I understand how markets react after a pause, for example. Or directional patterns, so patterns which measure the expansion that took place in the markets up or down before entering, and or neutral patterns which measure classical daily setups such as inside bar, outside bars. So I also try to analyze what happens after that classical well-known patterns from technical analysis. So there are some families of patterns which read different characteristics of the markets.
Have you found that any particular groupings are more successful or better than others?
Well, that depends on the conditions. It depends also on the trigger, because, for example, if you enter on a stop order at a breakout, obviously you are looking for something that reacts trending to a certain condition. And this trending mode might be generated from a completely different setup. While if you look for a mean reverting enter, so a limit enter at a support or on the short side on a resistance, you look for a reaction of a reverse in the market, let's say on sort of a pullback or things like that, So obviously also this leads to different setups before. So for any kind of entry, you have different family of patterns that lead to the best results. And it also depends on the instrument, as I mentioned. Just to give you an example, if you look for a trend following, an intraday trend following strategy on the E-mini S&P 500, you will really find hard times. You don't find, at least I was not able to find decent patterns to give you a decent setup. If somebody finds it, please, will give them my email, send it to me because I'm interested in that.
Yeah, sure. So I think you mentioned earlier that you have 40 different patterns. Was that right? 40?
40 is the basic number of patterns I use. Then I have another file with over 130 patterns, which goes deeper into detail. But consider that running through this optimization sometimes is also slow, depending on the machine you use. So it's better to go for a basic setup. And then if you find something interesting, you can deepen it, going through different values of the different parameters which are building the pattern.
Okay, so how do you actually come up with all of these ideas for patterns? Is there a process behind that you can share?
15 years of experience in the market. I mean, I built the patterns based on some basic ideas, and then slowly I added some mirror patterns, short to long, long to short, and so on. And today I'm satisfied with this 40 basic patterns I use. If tomorrow I find something new, I might add it. So it's something you build brick after brick, more or less. It's a very slow building process. But now I think I'm so asymptotic to the final level, probably.
Yeah, sure. So in the previous podcast episode, you discussed your idea behind indicators and you're very much into trading using price action. So are these trigger or setup patterns only for price action based trading, or can you also include indicators in there as well?
Well, the patterns themselves are built with characteristics. So you can call it price action, which is true. It's not the classical price action we have in mind. Now the internet is full of websites promoting price action approach to the markets, which is slightly different from what I do. But let's say all the patterns I use are built on bars or candlesticks combinations. Indicators are not in these patterns. I think that they might be used as a filter, an additional filter to the entries we decide to use. And another important thing, maybe I mentioned it in the previous podcast, I don't remember this. Normally indicators make sense when you work with time frames which are at least greater than 30 minutes bars, things like that, because below that, even for somebody says the markets are fractal, the indicators are destroyed by the noise of the markets, in my opinion. So they make sense also after, but I don't use them as a setup builder.
Okay, let's talk a bit about timeframes actually, because earlier you mentioned that you use these a lot for intraday trading, but what about for longer timeframes, perhaps daily bars and longer than that? Can this kind of approach be applied to patterns that way?
Well, be careful about that. I build the patterns out of intraday charts, but they mostly refer to daily bars, because how I build them looks back into the previous 1, 2, 3, 4, 5 days.
Okay.
So actually I build a setup which should be effective for the next day or 3, 4, 5 days again. So actually I look for a short time trade, also because I believe that the pattern loses its effectiveness if we decide to stay in the market for 1 month or so. How could a 2 days behavior influence a trend for a month? This is crazy, obviously. So actually, I build them on these characteristics. If we go for longer term, I believe that any pattern is losing importance, because if you think about that, the behavior of a day or two or of a week or two hardly influences a longer term move, because the action of all the player is diluted into the market, let's say. So how it moves actually does not have that importance for a longer term. So these chart patterns are mostly effective if we look for a medium term maximum time horizon, which means I normally have 5, 6, 7 days long trades, not longer than that, hardly longer than that.
Okay, so have you found that perhaps that maybe the setup is the daily time frame and then you use a trigger on intraday charts? Is that how you apply it in your own trading?
Some of these patterns also look into the intraday. For example, if I decide to trade after 10 a.m. in the morning on a certain market, I might look into what that market has done so far. So from the open of the session to 10 a.m. and that might be contained in a pattern I built, the high of the day so far, the low of the day so far, the expansion so far, all these things, So, but at the end of the day, I don't really trade on the minute. I trade for trends which can last 1 day or more days. And the intraday definition is just to read more in depth what the market is doing, not just to take advantage of a higher frequency or things like that.
Yeah. Okay. So 24-hour markets is can you use these patterns for those, or is it best to use markets that have a more defined open and closing time?
Oh, you can use it. You can use it because unless you only work on gaps, of course. Gaps are hard to find on a 24-hour market. This is clear. But if you think about the indecision patterns, where indecision is something where you get a price moving up and down and at the end getting back to where it started from. So this is something you also find on a 24-hour chart. And also expansion is something you can find on 24 hours. It's easy to read how much the day moved and things like that. So there is no problem in using these setups also on a 24-hour chart. Then it might be that out of the 24 hours or 23, depending on the markets, there are a portion of data which are more important. Let's say the day session on the US markets or things like that, just a period of time during the day where the data are more important because there are the most important players in the market in that very moment. So in this case, we might decide to use a cut session to better analyze the behavior inside those periods. But this is maybe a bit too advanced to discuss now on podcast. Let's say the 24 hours are fine. This is my basic answer to this.
Okay, so you mentioned quite a few times you've mentioned time. So is time a trigger that you use when you're testing?
It might be on bias strategies because one of the analysis I run sometimes is to find out if during the day there are different behaviors in some markets, which means let's take market A. Let's see if this market A during the first hours of the day is normally more bullish or more bearish and things like that, So if I find out that a certain market behaves in a certain way during different periods of the day, I might decide to enter on a specific time of the day just because I expect the market to be bearish or bullish for the next couple of hours. And once I decided this, I might filter this entry based on some patterns, which I obviously study afterwards. But this is not the only trigger. There are triggers where the time of the day, as you mentioned, is a filter where I define a window of time during the day where I know that the entries are more effective. On many markets, let's take the European DAX future just as an example. It's not a 24-hour market. It opens at 8 a.m. and closes at 10 p.m. So from 8 to 10:30 or things like that in the morning, normally the entries are not very effective because the market is a little bit randomly driven. So obviously, why should I enter when the conditions are not the best? So I wait till a certain moment in time and I say, okay, from 10:30 to, for example, 1 o'clock afternoon, I can enter. And then I stop again for the next couple of hours because there is sort of a pause in the biggest place. And I start again, considering my entries after 3 p.m. up to 5, 6 p.m. These are just examples. They are not strict numbers. And after 6 p.m., there is no reason to enter for a trade which will be closed at the end of the day if I'm working on the intraday. So time windows, but the trigger in this case might be the high of the day traded so far, because I believe that exceeding that high, we are heading for higher highs or things like that, or the trigger might be the high of yesterday or the high of 5 days ago or things like that,
Okay. So what are you using for exits when you're testing these setup and trigger patterns?
This is also different from approach to approach. Some exits are time exits, so I close the trade after a certain number of bars, depending on the time frame I'm using, or the classical stop loss and end of the day exit, or again 5 days later exit, things like that, or sometimes stop and profit. Sometimes I also use stop loss and take profit of the same size just to measure how effective the move in the direction is. If I take the same measure of stop and profit, I have 50% possibilities to get to one level or to the other. So if I get a winning strategy, it means that with the setups I have built, there is a higher chance to go in the direction I want. And then after this information, I can start playing with the stop and take profit just to get the best result.
Okay, so when you're testing these patterns, are you looking, what metrics are you looking for there? Are you just looking for an accuracy type of improvement, or are you judging it as a complete system?
Both. Well, it's very difficult to get a complete system on a first try, but if that happens, you have to be happy with it. Normally, I consider the strategy at the first attempt without filters, just with a trigger. It must be a winning strategy, because if it's a losing strategy, I don't want to convert a loser into a winner just playing around with patterns. It doesn't make sense. That would be an overfitting. Now, let's say I have a winning setup. When I look at the metrics, the first metric I look at is the average trade, so that I know how robust the trades are. If I have on mini S&P 500 an average trade of $10, for example, I know that I'm going nowhere. $10 are not enough to trade that market. It's too small, because once I consider the trading costs in terms of slippage, commissions, and so on, I would get below zero. So if I get anything that is anyway positive, I try to improve it. So I go through the patterns and I see if with some of them I actually increase that average trade, for example. I also look at the consistency of results over time. So I don't want a strategy that makes all the money on 1 month and then is at break-even for the rest of 10 years, for example. I want something that shows an equity curve which is heading up most of the time, because that means that under different market conditions, I still find a positive behavior of my strategy, which is very important. And going back to many years in my testing, obviously I go through very different periods of time where very different conditions, bearish, bullish, hectic, anything, so many things happened in the last year, so that we are able to go through many conditions in any case. And I try to find winners throughout the time. At the end of the game, I have to have a strategy which makes money the most of the time, not too much money. It will be a question of position sizing, but it has to make money most of the time, and the average trade must be large enough, depending on the market and on my trading costs, which I know through my broker and so on, to cover the real-time problems that we always face.
Okay, so when you're if you're testing these trigger setup patterns to identify certain behaviors in the market, can you actually use the same approach for exits as well?
I tried, but I don't like that. If you consider this, what you mentioned should open doors to reverse a trade, actually.
Yeah.
Because if my trend I am riding is actually over because of a pattern, I might consider reverting the trend from long to short or short to long, for example. And this does not always work the best. So these patterns are the best to measure how effective the entry is, and then I have to play with the exit on a different approach. But this is only my opinion. I don't say what you said is wrong. Simply, I didn't feel comfortable in doing so.
Yeah, okay. Okay, so we're going to take a really short break here for a message from our sponsor, and right after that, Andrea is going to share some ideas for setup patterns, so you don't want to miss it. Are you looking to diversify your portfolio? How would you like to mirror the trading of some of the best traders around in a program designed to take the exact same trades they do? World Cup Advisor's auto trade service lets you do exactly that, and with the launch of Michael Cook's new Omega program, you can now join with an initial investment of just $15,000. Michael has his own money on the line, right along with his subscribers on every trade he makes in his Omega account. World Cup Advisor identifies futures and Forex trade leaders through rigorous screening, including live trading evaluation in the World Cup Trading Championship competition, and enables subscribers to mirror their trading buy for buy and sell for sell. As a subscriber, if your fill price is not equal to or better than your lead trader's fill price on any trade, that trade is commission free from your authorized broker. There are more than a dozen futures and Forex programs to choose from, and you can view complete actual performance data before subscribing. To learn more, check the show notes page at bettersystemtrader.com/45. Trading futures and Forex involves significant risk of loss and is not suitable for everyone. And now back to the chat with Andrea. Now, you mentioned that you've got about 40 patterns in your base group and then 100 and something secondary patterns. Can you share perhaps some ideas for people to start looking at these type of patterns?
One of the examples I always make, and one of my favorite patterns, is actually the so-called daily factor smaller than 50%. I take the whole session of a day, I measure the total range of a daily bar, and I measure the size of the body, the distance between open to close of the market. Okay. If the ratio between the body and the range is smaller than 50%, 0.5, normally the trend following entries are more effective. This is due to the fact that after an indecision day, because a 50% body compared to the range means indecision, because the market moved up and down, but at the end of the day, it didn't move enough in comparison to the total move it made. And after the indecision day, we have a higher possibility to get a decision in a certain direction. The extreme case is a doji. So after the doji, you have maybe a stronger move. This is one of my favorite patterns. Obviously, this indecision pattern can also then be built on weekly bars or better said, on the last 5 days, which is still a week, but it's a rolling week. It's not the weekly bars as we intend them off the chart. And it helps really on trend following. You can use it the other way around, saying that if the body is greater than 50% of the range, you might consider or get better results with counter trend moves.
So what about if you're building long and short systems? Do you prefer to have some symmetry in the entries there by using opposite logic, or is that not really something that you look for?
Oh, I look at that depending on the markets. Just to tell you an example, on index futures, I believe that the behavior of the market is different from long to short. We know about panic selling, but we don't know about panic buying. At least I never heard of it, because when the market falls, it does in a much more violent way than when it goes up on index futures. So on index futures, I accept a lack of symmetrical patterns for my long or short entries. I can accept that. While, for example, on Forex currency pairs, I always look for total symmetry in the patterns, because I don't see any reason why euro US dollar should go up in a different way rather than down. So if I get a pattern giving good information about long entries, I expect the mirror pattern to give me good information about short entries. When I talk about mirror, obviously I don't refer to the decision patterns I mentioned before, but to expansion patterns, such as if yesterday the expansion was greater than 0.5% or things like that. Obviously in that case, if it's an expansion to the upside, I expect to get mirror results with an expansion to the downside. So on On currency pairs, I definitely look for symmetry. On commodities, I also look for symmetrical behavior, even though in that case, there are conditions where sometimes there are sort of physical limits to the price. A commodity cannot go below its intrinsic value. But these are more things linked to philosophy rather than to trading. So let's say also commodities is better to look for symmetrical patterns if we want to explore the markets.
Okay, that's interesting. Thanks, Andrea. So for people who wanted to use this approach or get started using this approach, how would you recommend they do that?
I think that they should really try to understand what I say. I mean, if they believe that what I do makes sense, now the next step is, yes, but what patterns does he really mean? I mean, he explained he explained the expansion, but how do I really build them? What are the best and so on? They should try, play around with the charts, play around with codes. Try and go is something that helps tremendously. And that's always a good way to go. Then if they want to use my already available knowledge, I also offer some education about that on different levels, of course. And I suggest that somebody who refers to this already studied on his own anyway, because going for a course without the necessary basic knowledge sometimes is a waste of money, in my opinion. And it's always useful to keep the money because in trading it's of top importance.
Yeah, sure. Okay, so let's move on to the education side of things just quickly, because I know that you do have a course which covers some of the stuff we actually talked about today, which is pretty cool. So can you mention what that course is and what's covered in it?
You probably refer to my Skilled Academy course.
Yeah, that's right.
In skilledacademy.com, we are offering a course, an online video course, where I go through the development of strategies. And in this course, I cover all the aspects I mentioned about the patterns, with plenty of examples and ready-to-use strategies if you want, because once the examples are done, they have been prepared through a strategy which was built. So there, obviously, somebody can go through all this information. The advantage of that online course is that the videos are there, and once you subscribe to a course, you can have live access to these videos. So also, if things are not clear at the first glance, which is most probably, then you can look at that as many times as you want again. This is something experimental because I've never been very active actually on the educational side. Also, my live courses are run very seldomly, but I've been asked so many times to do this that at the end of the day, I decided to prepare this online course. And I was helped by some friends because they compelled me to record the videos. I am always a little bit lazy and procrastinating everything. So these friends really helped me. And now we are on the right path. We have prepared this first course based on what people ask for, and then we will also have some other courses in the future about position sizing, about strategy analysis, and about portfolio build up. So it's something which is interesting in my opinion. In any case, fully evaluate that there's also a free webinar available, recorded in this time, but there will be something else which I will do in the future. I will promote the course through twice a week webinars. So people can register to the free webinar and go through that. There will also be an example about the strategy in this. So they will really understand if that approach is something suitable for them. And only afterwards they might decide to register for a paid event.
Yeah, okay. I'll get the links for those off you, and I'll put them up on the show notes page so that people can find them easily. So that Skilled Academy course, what type of trader is that designed for? Is that for a beginner or more advanced, or?
Oh, that's for, I might say, well, depending on what beginners is, I might say intermediate, low intermediate. People, anyway, willing to understand about automated trading. It's not for discretionary traders. It might be, but it's not the purpose of the course. So let's say all people who decide to program their own trading systems, and they don't have necessarily to be really skilled. Skilled is after the course, they will become skilled. And for more advanced, I think you are aware of this. There is the trading masterclass in New York, but this is a live event, which is, from my point of view, it's more sort of a reunion with friends. I'm running this with my friends Kevin Davey, Michael Cook, and Tim Ria, all previous winners of a World Cup Trading Championship. So it's a fun experience to meet with these friends, and we decided to offer our sharing of knowledge to willing students. That one is for more advanced students, in my opinion, because it covers things from different perspectives. We are 4 different traders, all successful, but all successful in different ways. So people coming to that course actually will see 4 different approaches to the world of trading, and they will see how different approaches lead to a common positive result. That's a great experience in any case. I think probably unique. I don't know if we do it again in the future. It depends on the response of this year.
Yeah, I'll actually be attending that masterclass in New York, and I'm really looking forward to that. I think that's.
I didn't know you were coming.
I'll be there.
Person, this is great news. I don't have underhand all the registration process because it's run by Kevin in the States, and so that's good.
Yeah, I'm looking forward to that. So, do you know what topics you'll be covering?
Also, in that case, mostly will be a system development, of course, and as each of us is developing systems from different points of view, each of us will show his own way of developing systems, and then each of us will cover also particular topics linked to the system development in general. And there will be also group workshops, because once we explain a topic, then we put people at work in order to assure that they really digested what we deliver. And the group people will be attendants will be split in groups, and each group will work for some hours on a specific topic, developing a strategy. So we will accompany the students through the development process so that they go back having already done something, and that obviously boosts their capability of doing that in the future on their own.
All right. Well, I'll also have a link for the trading masterclass up on the show notes page for people to go and have a look.
Yes, for that one, I believe that there are not so many spots left so far. I think we are close to closing the registration. So I'm not pushing anybody to subscribe, but if you are thinking about that, please be fast. Ask the questions you want, because I know that we are close to the end of the subscriptions. It's in April, so it's actually very close.
Yeah, it's not far away at all. Yeah, so
yes.
Yep, I think it's a marvelous opportunity. So if anyone can make it, you should try and get yourself there. It'll be fantastic. So thanks for chatting today, Andrea, and sharing a lot of information about the setup and trigger patterns that you use. I think that's really going to help people to look at entries a little bit of a different way. So
I hope so.
Yeah, so thank you very much for sharing that with us today, and I look forward to seeing you in New York in the masterclass.
Well, thank you, Andrew. I'm also looking forward now that I know that you're coming, and great ciao from Italy to everybody.
Okay, thank you very much, Andrea. Enjoy your day.
Ciao.
Ciao. Loads of great tips and advice from Andrea there. The main idea behind the chat today was understanding how Andrea looks at entries. The traditional approach of looking for a setup and then a trigger can limit the opportunities to read the markets, and so Andrea's approach of using a trigger first, whether it be a breakout or limit entry or something else, and then using that as a base to study the surrounding setups, that can give us a broader variety of possibilities to understand how markets move or how they could react. A great tip from Andrea, he said, if you understand the normality of the market, then you also understand what to do in that market. Anyway, if you want more information about this episode, head over to the show notes, bettersystemtrader.com/45. We have links to additional content if you'd like to know more about Andrea and his work. Plus, we also have a transcript of the interview if you prefer to read it as well. Now, towards the end of the chat, Andrea mentioned 2 options for learning more of his techniques. The first was his course on Skilled Academy. On the show notes page, I've got a link that will take you directly to that course, so you don't need to hunt around for it. Just go to the show notes page and you'll see that there, bettersystemtrader.com/45. Now, the second option that Andrea mentioned was the trading masterclass being held in April in New York. Now, at the time of the recording, there were a few seats left, but unfortunately, they've all been taken. So registrations are now closed. Sorry about that. However, I do know there's a waiting list. So if you're interested, I've also got some details about how to be added to that waiting list just in case. You can get those from the show notes page as well, bettersystemtrader.com/45. Anyway, that's it for this episode. I hope you enjoyed the chat with Andrea Unger and picked up loads of tips for trade entries. I'll catch you at the next episode. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.